San Diego homebuyers, brace yourselves. The Feds just slashed rates, but don't expect mortgage rates to follow suit, at least not the way you might think. There's a lot more at play here, and today I'm breaking down what the Fed's latest move really means for you. Is this the start of better rates or only more of the same? Stick around because I've got the inside scoop on what's happening with our local market and how you can navigate the shifting tide. San Diego's about to get a major upgrade, and no, it's not another taco shop. Imagine this, a $15 million enhancement to an already rocking Liberty Station with more sky views, eateries, vintage cocktails, and a garden perfect for your next big event. This new hotspot isn't just going to shake up the local scene, it's bound to boost property values in Point Loma as well. Stick around, you'll want to hear more on this. Here's something that's surprising. New homes in San Diego are actually selling for less than older ones. That's right. Brand new builds are coming in cheaper per square foot. And today I'm breaking down why this is happening and what it means for you if you're buying in this market. Curious yet? Stick around because this could change how you look at your next home. All this covered here in this week's San Diego Market Matters, and I'm Karl Kyler, your San Diego Realtor. If you're new to the channel, please consider liking the video and subscribing to stay up to date on all the materials I post about the San Diego market. And real quick, if you're thinking of selling or buying here in San Diego, there's a link in the description below you can click on to schedule a time for us to connect so we can talk about your goals. Or you're absolutely welcome to call me directly. That's how most people do it. Now, on to the good stuff. Let's just dive into what everyone's talking about. Last week, the Federal Reserve made a major move by cutting the Fed funds rate by 0.5 percentage point. This was the first cut we've seen since the COVID era when rates were slashed to near zero in a bid to stimulate the economy, which in part drove inflation out of control. After a series of aggressive hikes over the past couple of years, we're now sitting in the range of 4.75 to 5% for the Fed funds rate after this last week's cut. Now, I know what you might be thinking. Does this mean mortgage rates will drop too? This is a regular question I'm getting from almost everyone that's looking to buy. The simplest answer is not exactly. In fact, mortgage rates actually went up immediately after the Fed announced the rate cut. And here's why. Mortgage rates don't follow the Feds directly. They're tied to the bond market, particularly the 10-year Treasury yield. When the bond market gets ahead of the Fed and anticipates these cuts, it can sometimes cause short-term volatility. It's exactly what we saw this last week. So what is the metaphorical curveball that the bond market didn't see coming? Housing starts and permits data came out stronger than expected. This signals more economic strength, which pushed the bond market higher, and in turn, mortgage rates followed. This is what I was getting at last week with regards to the volatility of mortgage interest rates. One week they can be at a 2-year low, and the next, despite the Fed funds rate being cut, they can rise. Now, mind you, they didn't rise very much. So yeah, even though the Fed is cutting rates, mortgage rates can still be unpredictable. Kind of like your Wi-Fi on an extremely important Zoom call. Looking ahead, the Fed isn't done with rate cuts yet. They've indicated another 50-point basis cut by the end of the year, but we all know how the Feds have overpromised and underdelivered with rate cuts in the past. Despite their past broken promises, it is more likely that the Fed funds rate will continue a trend downward as well as mortgage rates for the coming years. Now, how does this all affect us here in San Diego? Well, the Fed cuts are designed to make borrowing cheaper, which is great news for buyers. Lower interest rates could bring some relief for those who have been priced out of the market due to high mortgage rates, allowing more buyers to afford homes. For sellers, in theory, this would mean more buyers could enter the market as rates drops, giving you more leverage. But for buyers, waiting too long could mean missing out on lower rates while competition heats up again, like the proverbial double-edged sword. And it's not only mortgage rates that are impacted. The Fed funds rate also influences everything from car loans to credit cards. Lower borrowing costs could free up extra cash for consumers, potentially driving more economic activity, which in turn could keep San Diego's real estate market buzzing. In addition, on the negative side, we will likely see our interest rates on high yield savings accounts and returns on US Treasuries drop. In conclusion, while the rate cut is a step in the right direction for lowering mortgage costs, don't expect an overnight game changer. The market is still balancing tight inventory, high demand, and affordability. Whether you're a buyer or seller, you need to stay on your toes as rates fluctuate. And one of the best ways to do that is to like and subscribe to my channel. I was begging for me to drop that there. The big question most people want to know is if the Fed did the cut in time. So let's hear what you think. Was this the perfect first step to executing the economic soft landing, or Are we way past that? Let me know your thoughts in the comments below. Now, San Diego's about to get an exciting new hotspot, or more so an enhancement to one we already have. It's called the Admiral at NTC, a $15 million project set to transform Liberty Station into an even bigger culinary and cultural hub. As you may know, Liberty Station is one of San Diego's most iconic landmarks. Between its historical significance and its current status as a vibrant art district, it's a hot spot for locals and visitors alike. It's got great restaurants, the Lot Movie Theater, the Loma Club Golf Course, tons of bars, including a Stone Brewery, and they also have an indoor-outdoor food hall market that has more places to order food from than I can even count. On top of all of that, they do holiday events, movies in the park, ice skating during the winter, music festivals, beer festivals, and the list goes on and on. They also have a rockin' launch space if you want to paddleboard or kayak into the bay. As a matter of fact, this is one of mine and my wife's favorite places to launch out on our paddleboards. And now they're looking at making it even better. This new project led by local restaurateur Ryan Thorson is going to take the historic homes that have been sitting vacant for decades and turn them into a 7-acre hospitality complex. That means more dining, more entertainment, gardens, skyline views, all while preserving the rich history of the site. Now let's zoom in a little bit. The development will be located near the entrance of Liberty Station along Rosecrans Street, the busy side. The site is made up of 7 Spanish colonial revival style homes that used to house naval officers way back in the day. These homes are now going to be repurposed for new businesses that are planned to open summer of 2026. One of the highlights, a 2-story home that once hosted parties for diplomats and dignitaries, will be transformed into a high-end event venue, perfect for weddings, corporate events, and other celebrations. It's going to even have a classic San Diego charm with a bed and breakfast on the 2nd floor for anyone that wants to stay the night. Now here's where it gets even more interesting. The canteen is set to open as a bakery, floral counter, and a wine shop with grab and go options. So whether you're in the mood for a picnic on the nearby lawn or just grabbing a bottle of wine to enjoy at home, you'll have plenty of options. And how about live music, you might ask? They got that covered as well. And let's not forget the entertainment factor. A bar and old-fashioned game room will add a little extra fun to the mix. Think lawn games with your friends while you enjoy a cocktail, kind of turning back the clock to simpler times, but with a modern twist. But the piece de resistance, the former guardhouse at the Liberty Station, will become a vintage cocktail lounge, a throwback spot for those who want to enjoy a classic drink in a historic setting. And on top of it, it'll only be 1 block away from the soon-to-open Joan and Irwin Jacobs Performing Arts Center, adding even more cultural depth to the area. You know, I gotta tell you, I really dig how old school classy aesthetics are coming back in style. Now, if this sounds like it's going to be a prime place to be in San Diego, you're absolutely right, but there's still a bit of a wait. Construction is slated for 2025 with doors set to open in summer of 2026. Thorson still needs to secure permits and raise money for investments. So though this project has all the signs of becoming a major social hub once it's completed, to me, summer of 2026 still sounds a bit ambitious for a launch date. And speaking of Thorson, you're probably wondering, who the heck is this guy? He's the mastermind behind Mr. A's and Bankers Hill. The rooftop lounge, he turned that into an even better hotspot for happy hours and date nights. Yep, that's him. So you can bet there's gonna be a lot of attention to detail and a great vibe with the Admiral. Point Loma is already one of San Diego's highly desirable neighborhoods with a pretty impressive entry price point. Its proximity to the water without the constant beach traffic makes it an ideal spot. With this new project enhancing the community even further, it's safe to say that Point Loma's desirability and potentially its home prices will only continue to rise. Now I want to hear from you. What part of this new project excites you the most? Is it the sky views, the vintage cocktail lounge, or maybe the live music in the bakery? Drop a comment below and let me know what you are looking most forward to. Lastly, here's a question for you. Would you believe me if I told you that buying a brand new home in San Diego could actually cost you less per square foot than buying an older one? That sounds backwards, right? Well, it's true according to a recent Zillow report that suggests that new homes in San Diego are selling for $552 per square foot, while existing homes are going for $609 per square foot. That's a $57 difference, which is the largest discount between new and old homes in any major US metro. But before you go thinking new homes are a steal, let's dive into why this is happening and what it means for our market here in San Diego. First off, location is the main driver behind this difference. Existing homes are closer to San Diego's most desirable coastal areas. Think of La Jolla, Encinitas, and Del Mar. And we all know how crazy demand is for those spots. Even the areas right outside the coastal communities are getting tons of hype and demand because they are close enough to the coast, but they don't deal with the coastal challenges such as access or traffic. And those areas are all developed out as well. Meanwhile, new home developments are typically built further inland, in more affordable areas like Chula Vista, Otay Ranch, East County San Diego, Poway, and parts of San Marcos. The land value near the coast is what's keeping prices higher for older homes, while new construction is being pushed to the farther inland reaches of San Diego. Think about it this way. If you build a brand new home 3,000 square feet in La Jolla, it would cost you at least 3 times more if you built that same home in East County El Cajon. That's the reality of coastal real estate here in San Diego. This is one of the reasons you will see teardowns happen in the coastal communities. It's because the value is in the location, and the return or the fully realized potential in the value is in building a newer home in that location. Now, this trend makes for a really interesting dynamic for buyers. On one hand, if you're looking for a home in the coastal or more established neighborhoods, you're gonna be paying out your tail side for that location. But if you're open to moving a bit further inland, you could potentially snag a newer home for less per square foot and possibly with more modern amenities and features. But here's where it gets tricky. Inventory is tight across the board. Even though we're seeing these price differences, there just aren't a lot of new homes being built to meet demand. In fact, San Diego issued more permits last year than it has in decades, but it's still not enough to keep up. And as a matter of fact, we are behind 90,000 new builds in San Diego County. And low inventory, as we've seen time and time again, keeps prices high, whether buying new or old. In addition, some of the new home developments that are popping up aren't exactly entry-level homes. Trevi is a new development deep in East County that has homes coming to market at 1.4 million and up. This is so bewildering to me to see new homes in Lakeside, of all places, starting at 1.4 million for the smallest model home. Not to suggest it's not worth it, it's just a hard pill to swallow. So what's the outlook for buyers? Well, if you're dead set on living closer to the coast, you'll have to accept that even though new builds may not be an option there, the resale value of existing homes is going to remain strong. That's because coastal communities are mostly built out, and the only real development you're gonna see is infill projects like townhomes or condos, or homes that are being torn down and rebuilt like I mentioned earlier. But what does this all mean for the future of our market here in San Diego? With San Diego issuing fewer housing permits than in 2023, the pace of new construction is expected to slow down, especially with the challenges builders are facing with labor shortages and higher costs for materials. Even though new homes are currently cheaper per square foot, that window could start to close if supply continues to shrink. And this isn't just a San Diego issue, it's a national trend. Across 21 major US metros, buyers are seeing discounts on new builds compared to older homes, with San Diego leading the way. But the reality is, no matter where you're looking, inventory is tight, and that's what's keeping prices from dropping significantly. So whether you're in the market for a brand new build in Chula Vista or looking for an older home in Encinitas, the key is understanding what's driving those prices and where the opportunities lie. I want to hear your thoughts. Are you okay with moving inland to save per square foot? Or are you holding out for an older home in a prime location? Let me know in the comments below. And that's a wrap for this week's San Diego Market Matters video. If you found this information valuable, be sure to hit the like button and subscribe to my channel if you haven't already. And if you're thinking of moving to San Diego, check out this video I posted about the 8 things every buyer should know before moving here. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you next video.